Good evening, everyone. Good evening to this Thursday session, Thursday training session about financial literacy and money matters. Welcome you again for this Thursday session that we have every Thursday, 8 p.m. Central Time, 9 p.m. Eastern Time. Tonight, speaking, my name is Margaret Businje. I live in Dallas, Texas, and I'm glad to be here. I'm a financial professional, and I'm happy to discuss with you tonight. My other co-host is going to be Nyamar Roth. She's a financial professional, a mom, and I'll give her the honor to introduce her more to you, but you'll get to love Nyamar because she's really a great financial professional. So everyone, again, we really value your time. Thank you for joining us. We're going to have this discussion as a discussion that is open to everyone. We love everybody's interaction, discussion, additions. So let us make this discussion as interactive as we can. So without wasting so much time, I'll go ahead and introduce you. Ms. Nyamar, join us and take us through the discussion for tonight. And after the discussion, we'll open up for a Q&A for these questions and everything else that we'll need to take on. Nyamar, the floor is yours tonight.
Absolutely. Thank you so much for that introduction, Immaculate. I appreciate it. Hi, everyone. Thank you so much for tuning in today. So I'm excited to do this section with you guys today. So would you be able to, oh, I can share my screen. Perfect. I'm just going to go ahead and share my screen with you guys, and then we can just dive in. All right. So once again, I just want to go over what we offer here at FEG. FEG Insurance Services is the new rule of money. And I'm just happy that you are able to join tonight, and then we can learn together and then have discussion and then learn why it's the new rule of money, and you should be aware of it. So without further ado, I'm just going to go over some statistics with you about what is going on behind the scene in terms of financial world. So these are just the scared truth about retirement. The facts that one in three retirees lives in poverty, and 7 in 10 pre-retirees are not prepared. Only 13% say that they are knowledgeable about financial and investment product, and 85% of older adults have a chronic illness. Social Security is expected to be depleted in 11 to 15 years. So these are really scary. If you don't pay attention, how are you gonna prepare for the better later on in life, right? So it's good to explore this topic, and it's good to be knowledgeable about it. So that's why we share these statistics with you guys, so you know to plan accordingly. So with those statistics given, how can you learn to cover all of life what ifs with just one payment, right? So everything is competing with our attention. You know, we have like mortgage if you own a home, we have rent, we have like rental insurance even, or car insurance. Everything needs coverage, you know? And what we really tend to forget is how we need coverage for our life, you know, because we're the main provider of all of these happening, you know? So like the very good questions you can ask is like, if something happened, like what if you die too soon, you know, or what if you get sick along the way, or what if you what if you got sick, what if you die too soon, and what if you live too long, right? So how are you gonna, you know, carry on with life? So those are life what ifs, and those things you can cover and you can plan accordingly with just one payment. Okay, so as I mentioned here, these are the questions I was talking about. What if you live too long, or if you get sick along the way, or you die too soon? So, if you live a long life, right? So most of our country's saving are locked up in, so you might be familiar with like the IRA or 401k. This is where large amount of our money goes to this. And then what we don't really, or what we're not taught on is how it's at the stock market and it's at risk, right? So the taxes, and then also it can be taxed. If you were to go and get your 401k out today, let's say you've been in the work market for like 25 years, right? Because you're like 39 or 40. If you want to go and take your 401k right now, you will be taxed, and that tax will be heavy. And also to maintain your 401k on that saving, they are charging you fees. So, and then with all that too, if the market crash, your 401k money, you could lose a chunk amount of it. Okay, so it has the downturn of it, or it can be delayed. So therefore, whatever you are planning for retirement can be destroyed so quickly with just a crash like what happened in 2008. So it is wise, or we do advise that you learn how to eliminate the market risk and increase tax efficiency and reduce fees. So really the choice is yours, and that's what we're here for today. So if you get sick along the way, right? So every year, millions of Americans are diagnosed with a heart attack or stroke or cancer, right? The average age of a critical illness claim is 43. 43 is really young if you think about it. It's not far for many of us, or we're already past it, So because of that, 70% of those people who do get sick, they do survive, but they also go bankrupt at 44. Why? Because if you are sick, you cannot attend to your regular duties, like, like going to work, or attending to your children. So, but going to work is like the main, thing that leads you to bankruptcy. So it's important that you are prepared, because we don't know, like no one asked to be sick, this just happened at randoms at that, but it's better to be safe than sorry, because we have family members who are sick right now and would not even be able to reverse back and then plan accordingly, because it's already a bit too late. So don't wait until something bad happened and then it's like, oof, I wish, I took that class very serious or something like that, So another thing too to look at is how are your bills going to be paid? You have rent or you have mortgage, because you can't go to work now. So these are the problems that we need to have solutions for. So the next thing is, what if you die too soon? So if you are gone too soon and your paycheck is gone, how will your family will survive, financially? Now it's already hard that they're grieving the loss, that they went through, but also it's no joke that like the loss of a paycheck is also painful too, because now if you bought a home, they might have to turn that home in, or just going to be even more stressful than it already is losing someone. And in our community too, we see a lot of GoFundMe, like an emergency happens, we rush to go fund, for the situation, and then we lay the person that passed down to rest, but then no one really ever turned back on the family that they left behind, on how they're doing financially, and we do have good support and good community, but we can also plan better and smarter and learn how money work in our favor, even if we have that, because it's clearly not enough for the people that you would be leaving behind. So this is where I want to spend a little bit of time. So with all the problems and all the stuff that I introduced to you guys, really there's the solution here is there are three type of life insurance and three types of way that you can cover yourself and your family. So the very first one is term insurance. So how term insurance work is like, it's like you're renting it. So it's temporary. Term stand for it will terminate at some point. That's what that means. So this one, we don't discourage it, it's good to have if you're gonna buy a home, because it can go from like anywhere from 15 years to like even 30 years, right? So you would be covered during that time. But however, it does not have a cash value. So you are not growing your money. Whatever money you are paying toward your insurance, it is just for your protection. So you don't really you don't have compound interest where you would have cash value, right? However, it's low cost. If you don't have insurance and you cannot afford other insurances, I would definitely say at least have a term insurance, right? Because this is very affordable. You can talk to any of us or who invited you today to give you a rate, but it's very, very affordable. We're talking like you can start at like $15, $30, to be covered. Think about that. When you're paying your car insurance, most people pay like $300, $200, 100 or more. So, but clearly, which one is more valuable here, your life than a car, because car is replaceable. So that's term insurance. And then another thing too, once it does end, because you are in the insurance market, they cannot deny you to convert your life insurance to permanent insurance. But it's going to be very, very expensive, because if you got it when you were 30 and it's 30 years, so now you're going to go back to the market as 60, trying to get cover as 60 years. So you can see how problematic that could be and how expensive that could be for you. So that's why in the long run, it's more expensive. But you can convert it to permanent life insurance at some point. So that's term insurance. And then the next one is guarantee universal life. So guarantee universal life, it guarantee coverage to any age, a guarantee level premium to any age, and a return of premium option. So this is for people that don't like risk. You will get a fixed amount every year. You do get cash back. You do get cash accumulation, but it's just smaller. Or like if the market is like performing at 12%, then you'll be locked in at whatever you were locked in. So it's more like consistent. You don't like any risk at all. But it's better than a bank, because the bank give you pennybacks. Even banks use life insurance to grow their money, to be honest with you. So the last one is Index Universal Life. So with Index Universal Life, what it does is it's one of the best options for retirement, because it has retirement cash values. You don't even have to wait for retirements. If you have your life insurance for some time and you grow cash accumulation there, and you accumulate cash there, you can take them out and use them however you want, tax-free, okay? So the whole point of being covered and having insurance, especially for Index Universal Life, is one, it protects, right? It protects you if something happened to you. Your family will be protected, you are protected, so they will have, your beneficiary will get the insurance tax-free. And then another thing too, you can use it as wealth transfer. I know maybe we're not at the 1% top or even like on the upper yet, but really people use life insurance for wealth transfer. And it's something to consider, because it's tax-free. The government can't come after your kids because you left a ton of money for them. It's tax-free. So people use it for wealth transfer. And then another thing, especially for us young people, we can use it for accumulation, cash accumulation. So if you started your insurance today, and then 10 years from now, it has like $30,000 in cash value, you can take that out tax-free, whether you use it for your down deposit, use it for travels, you use it for whatever you may please. Like you can use that for that. So it's really good for as a saving, because you can get like really much better interest and compound interest rate than the bank would offer you. So you just having your money sit in the bank is doing you a disservice. So the fourth thing that's really beneficial that I found is income tax free. So how is income tax free? It's not that it wasn't taxed, it has been taxed. So I know if someone wants to participate on this, please feel free to jump in. Like if you have $5 and you have $10, then you have $20. When would be the best time to pay taxes? So people are mute themselves. If someone wants to participate, feel free to jump in. But really, the best time to pay taxes is when it's low, when it's $5, because the government is going to take less money than when it was $20. But if your $5, if it grew to become $20, they can't be like, oh, wait, give us tax on the $15 that you gain on your compound interest. They cannot do that. So that's how it's tax-free. Because when you are paying for your life insurance, you are using money from your saving account that already been taxed. So it's already been taxed. It just taxed when it was smaller. Then now that it has grown to be $20. So imagine you put 30,000 in, and like 10 years, I don't know, this is like really random, but it becomes like $300,000. Can it? Possibly, you know? But now if the government is trying to tax $300,000, they can't, right? Because you already pay your taxes when it was $30,000, you know? So it's just great. But that's probably like just an example, but it's a bit exaggerated. But I'm just letting you know that when your money grow, you cannot be taxed. You can take it out tax-free, and that's how it's tax-free. So because you're like, how is it tax-free? You should be concerned, right? Because we're not doing anything, you know, that we're not supposed to. Actually, IRS approved, you know. So those are the four things that I want to mention. And up here, it also talk about like how is there's no downside risk, right? So what that means is if the market crashed today and it become negative 55 or whatever, you could not lose your money because you would be locked in at 0.25. So you're not receiving much, but zero is powerful when it's negative, right? Because compare negative 55 to 0.25, you know, 0.25 is all the way up here, you know? So you are getting some back, but not too much, right? But at least you're not losing your money that you have in the market. So you are locked in at 0.25. And then when the market is doing well, you get wherever you are capped at. So whether it's 12%, whether it's 11, it's 10, is 8, you get that on a yearly basis. That's how your money grow. So it's tax advantage income, as I mentioned, as I just explained earlier. Yeah, if someone have questions too, I know I tend to talk fast, so please like stop me and ask your questions. So or write it down to the end, and then we will be happy to answer your questions. So index linked gain. Yeah, so really having protection and having that peace of mind is really what we should all strive for, right? So one of the things that IUL in particular, well, not only IUL, most of the insurance that we do offer do have living benefits riders at no cost, right? No additional cost. So that means if someone gets sick, right? If you have critical illness, that goes back to that questions like, what if you got sick along the way, right? So this is where we cover, like you have living benefits. If you are diagnosed with like cancer or heart attack or stroke or anything so serious, you now have a critical illness, right? So that means the doctor can verify that, and you actually cannot work when most of us know someone that's diagnosed with something so serious, and like they have been affected where they can't work for months, even years sometimes. But life insurance, if you are covered, can come through by actually providing you a paycheck while you are recovering. So critical illness is covered, chronic illness, and chronic can also mean old age, right? So if you are much, much older now, you have, Social Security has mentioned that it's gonna like be depleted, like it's declining. So we can't really just believe on that, or only plan for the government in hope that they will continue to take care of people. Really, it's not a smart game plan, or you wouldn't want to like burden your kids, so it's better to just set things up for retirement in a better way. So chronic illness could also mean old age. If you cannot do your normal routine as usual, your life insurance can come in. And then the last one is terminal illness. Terminal illness rider, which cover up to 24 months of life. I hope none of us ever have to go through this, or our family member has to go through this, but that's like very serious when the doctor says like, hey, you have 6 months to live, and you actually can get all your life insurance while you're living if you wish. So for the first time, really, when people hear life insurance, they think of like, you only get it after you pass, but that's not the case because you can get it while you are living. Yeah, so this page is very important because it's all the problems we were throwing at you guys are kind of condensed in this. So another benefits, as I mentioned earlier, the cash accumulation can come in handy, right? So the living benefits continue, where like that cash accumulation we built, you can use it for medical expenses, you can use it for mortgage payment, for college funding, and bucket lists, really. So that's something that's available for you to use at any time. So this doctor, he was diagnosed with cancer, and he's a doctor. Even doctors get sick, like no one is absent on this, no one is, it rains and it just and unjust. Anyways, but this doctor was diagnosed with throat cancer, and he was covered, so he was able to use his life insurance, where he actually received $734,000, and like, when he was cancer free, he went back to work. But can you imagine how stressful it is to like a doctor is diagnosed, now they cannot work, like the regular income that was coming in is not coming in, but he planned accordingly. He wasn't stressed about finances. He was just focusing on himself and how he can recover at this point, and that's a success story. And if any of us ever have to face an obstacle like that, I hope we just bounce back like this doctor, because we will be covered, right? So that's just an example that we share here. So FAG also offer annuities. I'm not going to go into it much, but annuity is like if you have a 401k that's sitting and it's a lot of money, you can roll it over to a annuity. So where you're going to be like receiving a better interest rate, compound interest rate, and as well as like almost zero risk in the market. So I think we'll talk about it just a little bit more later on, but we do have that offer as well. So the 4 phases of retirement planning, right? So you probably have heard of 401k. And so this is just comparing the 401k and the IUL. So for 401k is tax deduction. So when they take when you agree to, put your money on 401k, they take it directly from your paycheck to the 401k, whichever company you're working with, and they don't take the taxes out of it. So that's how it becomes taxable at the end. But IUL, you already pay taxes as I explained earlier. So it's after tax, so it's tax defer at phase 2, and then it's tax advantage at retirement, so you don't have to pay taxes there as well. And it's tax-free death benefit. So if something did happen to you, your beneficiary get it tax-free. And that's not the case here for 401k. You can see that they do tax it at retirement, and then they tax it again if you leave it to your beneficiary. And taxes can be heavy, you guys, depending on how much you have. So it is smarter to pay taxes on the seed than the harvest, right? So can you imagine you put few grain, or like, corn, and then you just, you want to harvest your thing and then you get the same amount? Yeah, it would be terrible. So Index Universal Life. So this book is recommended. It's called Power of Zero. If you're a big reader, which we do suggest, you should definitely pick up this book and read it, and then go from there and learn more about this industry as a whole. Warren Buffett. So for the Midwestern, you know who Warren Buffett is, especially if you're from Nebraska, right? Because he's from Nebraska. Unfortunately, I didn't get the scholarship, the Buffett scholarship, even though I did apply. But his number 1 rule is never lose money. And then number 2 is don't forget rule number 1. So you don't want to put your money in the market and then you lose it. Okay, so this is a retirement asset. If someone were to put in $100,000 on their retirement plan, here's how it would perform. So you can see it's kind of small. I'm not sure how well you guys can see this. Let's see if I can make it bigger. Okay. It's funny, I'm realizing how small it is toward the end of the presentation. Okay. Okay, there you go. So you put in $100,000 in your market. And then let's say that you did this in 1999, right? You were ahead of the game. And like, look how much it dropped. It becomes 64,000 because the market here did so terrible, right? Actually, I wanted to do it on this graph, sorry. So it becomes 64,000, and then it goes back up a little bit, and then it goes back to 100,000, 100 something, right? And then it goes down again. I mentioned 2008 earlier because we had like a huge market crash there. And then it goes back up. So you can see the point here is the market go up and down, up and down, up and down. Eventually, you'll have a little bit of gain and in a better position. But if you were to compare that with the index, so this is the power of indexing right here. So the index is in green, blue. It's in blue, then the 401k is red. So if you had your money here, you can see when we had like a hard time in 2002, you were locked in at 0.25. So you didn't lose any money, right? And then it happened again in 2008. Look where your money is at, still locked in. So as of today, or 2019, according to this graph here, if you had your money on index, it would be $414,000, right? Instead of 225,000. So it's double as much. So this is definitely the smartest saving for yourself or your family. So let's say that you started at IUL at age 30. Your premium is about $300, so you pay about $3,600 a year. Really, it seems like a lot, but really to protect your life is not, because I know I pay more on car insurance than this, and they never give back anything. So, but at total contribution to age 70, so you would have put in $140,000, right? And if you live to age 70, you would be receiving 52,580 per year. That's a pretty decent amount to get, at retirement without any work. If you live to age 90, you will become a millionaire, pretty much. That's $1 million total income. If you got sick along the way, you would receive up to $388,000 in living benefits for you to recover. And then if something did happen, God forbid, like you start your policy and then you pass away, guess what? Even if you only pay 1 month premium, 1 month payment, your beneficiary get the $430,000. That's the benefit of life insurance, right? Because it covers the life unexpected that happens. So if you died at age 90, you still be a millionaire. So that's just an example of how it would look if you decide to get coverage today. So as I mentioned earlier, traditional money is like 401k. It has various fees. Money is at risk, no guarantee income option, okay? And then the fixed index annuity, you can roll over. We do offer the annuity, which is like a 401k, but the fees, the most you would ever pay is 1.3. So 0 to 1.3 basically, and no market risk. So because it's in the power of indexing, so they don't really put their money in the market where you can lose it all, right? Or you can lose so much money. And it's guaranteed income for life. So, and then 401k doesn't have guarantee income for life. So when you think of annuity, think of kind of hand in hand with 401k. Life insurance is life insurance. You're gonna get money regardless, as long as you make your premium. Okay, so it's your money, get educated. Here are some books for you. The new rules of retirement saving, and then the retirement miracle and the power of zero, as we mentioned earlier. Yeah, I think that kind of wrapped up our meeting. Once again, thank you so much, everyone, for joining us. And thank you, Immaculate, for hosting with me. If you have anything to add, or we're gonna give this time to do questions, please feel free. I would love to hear from you all. Thank you.
Oh, thank you. Thank you so much, Nyamao. That was a beautiful report. As I said from the beginning, all of us come here to learn every single day. That is why I can't always wait to come on here on Thursday and listen to the beautiful presenters, listen to all of us discussing together. So that was really good, Nyamao. Thank you so much for educating us. Thank you so much for sharing. Some people may be like, sometimes we hear the same topics. The reasons we do is because although we actually educate or discuss the same thing, the same questions, though, we still have issues in our communities. That means the lessons hasn't sunk in yet, because if it has done so, would have everybody actually covering their families. So don't feel like, hey, maybe we had this a topic some time back. The reason it's coming back is because, they say practice makes perfect. The more we talk about it, the more people actually open up to actually covering themselves. Not because people don't want to do so, but we need actually to educate more so people can see that there's nothing as important as their lives or their families' lives, because we do, like Nyamao said, we cover everything we do own. Our cars are already 100% covered. They are insured 100%. We have the perfect, comprehensive full coverage on our cars. We have the best coverages on our homes, our phones, and everything is covered. But unfortunately, when it comes to what matters most, we tend to be reluctant and think that that is expensive. As we always say, there's nothing as expensive as life, because everything else we do own, Be it the car, they have spare parts. Be it the home, it can go and you can acquire another one, but you have one life to live. So when we educate ourselves or educate our families, we have really to emphasize the importance of this, because there is no, maybe I don't know which you guys, which family, which communities you live in, but there is no month or 2 months goes without us losing our loved ones. Like here in DFW, really, it has been so hard in the past 2 months. We have lost 2 young people. It is very, very little disheartening to see, but we hope that although we can't stop death or we can't stop sickness, at least we have to be able to cover ourselves. So even if someone goes, don't go with everything that you've been working for. Make sure that your family, yourself are covered, because it is hard to be sick, but it is more harder to be sick when you can't even cover your bills, because when you get sick, really, get sick doesn't really feel so bad for you to say like, hey, the mortgage is going to be put on hold, or the kids cannot eat because you're sick. Everything is going to continue. And even bills are going to be more, because when you go to the doctors, when you're in the hospital, bills double, more than actually double. And everything needs to be covered, although you're not able to bring in a check to house. So yes, we 44 minutes past the hour, we'll open up our mic to our attendees to be able to ask any questions. We have some questions we had actually from the last discussion, but we'll keep those. We have to listen to the people in the house. Raise up your hand, ask your question. If you don't want to ask your question directly, you can send something in the chat. We'll be happy to answer anything together. Again, it's not just about asking a question. You can add something, because we believe that together we can actually educate our communities and ourselves better. So the floor is open. Please, if you have something to say or to ask, the mic is open to everyone. Thank you. Anyone? Or we can start with the question. We have like 2 questions, but it looks like Nyamao really tried to answer some of the questions we had received from the last discussion. Someone had asked, what is the difference between life insurance living benefits and health insurance living benefits? This question has come again and again. And that is why these questions are very, very crucial. The difference, I could just summarizingly say, the living benefit life insurance, like Nyamar was explaining to us, they cover you, they cover your bills. Let me say someone is critically ill or terminally ill and they're not able to go to work. They have a mortgage to pay. They have kids to go to school. They have bills to cover at home, those bucket lists. The living benefits, cash money, is going to go towards paying your mortgage. It's going to go towards paying your kids' tuition. It's going to go towards buying your kids' food. It's going to cover everything your check was covering. That is the life insurance living benefits. That is what it covers. So that is your money. That is like giving you some money. Let me say you're given 500,000. What can you do with that money? You're going to cover what you've been covering with your check. So when it comes to health insurance benefits, so I happen to be actually offering those products as well for health insurance. If you get sick and you go to see your doctor, your health insurance is only going to cover the medical bills, the medication, the hospital stay, but it's not going to pay your bills. It's not going to buy food for your family. So that is literally the difference. They are totally, totally different. Maybe we hear the living benefits, you feel like, hey, I have health insurance. I'm covered if I'm sick. When we talk about getting sick, we don't talk about the life insurance taking you to the doctor. It can actually take you. Let me say someone who is battling cancer. Sometimes those health insurance is not going to take you to the highest doctor because they're trying to minimize the cost. But if you have $1 million cash, really, you can decide to actually switch doctors because you're not going to be bound to one doctor. You can pick and choose because you have money. Money talks, as they say. If you have your money, you can decide to say, hey, I no longer need to go to chemo. I can try something else, because you have a voice. You have a voice, you have money to pay, you can do that. But again, that is the simplest way to say the life insurance living benefits covers what you could have paid with your money, and health insurance benefits do cover the medical bills. And someone else had asked again, following up on the discussion we had last time, you discussed more about the cash accumulation money. Am I able to access my money before I retire? That is a very good question with this one. Again, when we talk about cash accumulation, last time we did talk about the two major components of index universal life insurance. The index universal life insurance, it has two major components. The protection part, which is the life insurance, now that covers when you get sick, critical, terminal, chronic, you get the living benefits. If you die, your beneficiaries or your family, they're going to get what they call tax-free death benefits. You, God forbid, someone is sick, you're gone, your family is going to get the money that you actually protected yourself with. And if you live a long life, again, that is where the cash accumulation comes to. The two components, the life insurance and accumulation. The accumulated money that you have in your account value, what I tend to call your accountable, okay, for those people who speak a little French, I speak a little, but I know that. So it is a savings account under your life insurance. Initially, this was meant for you, for your retirement, if you do have that account. But that doesn't mean that if you need your money at 50 or 40 or 45 under your cash accumulation or surrender value, you can actually take out the money and use it at any time. Again, the cash accumulation or the money under your surrender value can be accessed at any time as long as you have that money in there. So there is nobody should tell you, though, you can never ever access your money. You have to wait until you're 65, you're 70, or you're 80. No, the money is yours, and you can actually take it out tax-free, depending on how you choose to take it out. So those were like two major follow-up questions we had from last time, and we'll have always to go back and answer those questions, because that is the point of having these discussions. Sometimes we go through quicker. Some people come in a little late and then they have no time to ask their questions, but we want to go back and revisit the questions that were asked previously, so we can make sure that we are really educating, not just passing by. So those were the two major questions that were asked last time. We were able to answer. Again, we have a few minutes left. We're going to try to close our training at exactly 9 p.m. If you do have another question or anything to add, I'm going to open the mic for a few minutes. If nobody has anything, you have to go ahead and call it a night. I believe we had a great discussion tonight. So the floor is open again for any questions and additions. Thank you. Okay, perfect. It looks like Nyamal did an amazing job. So we'll go ahead and call it a night tonight. I'm hoping nobody. Okay, go ahead, Mr. Kaizi. I waited and I didn't see any. Okay, go ahead, Mr. Kaizi. I saw you had your hand up. Thank you.
Yes. Thank you, Miss Immaculate. Thank you, Miss Nyamal, for those great words of wisdom and all the information that has been shared within. And just to add on to the value that the IUL brings to this table, in addition to the accumulation part, it's called the Dupli Fund. It works both as an accumulation vehicle and as well as can be used as a loan vehicle, where you can be able to loan your money at a 6% rate and below, and also make money over what you've borrowed out of it. It also gives people who have a cap, who would like to invest for their children, like for the cap of investing into a gift tax is about 18,000 for 2024. But with the IUL, the sky's the limit. And yes, the government knows it, but it gives us the opportunity to be able to educate you all about how we can have this available to you while taking advantage of the tax advantages. So reach out to whoever invited you here. We will be willing to talk to you more about all the advantages. And yes, people do ask, how come I didn't hear about this before? Well, this is a new tool, a new steroid in terms of the life insurance. And we are happy to be able to present it to everybody. Thank you.
Thank you so much again, Mr. Kaizi, for adding on that. That was beautifully put. Yes, we keep learning together again, as Mr. Kaizi said. If someone invited you here, when we come here for a discussion, we don't go deeper. You've seen we haven't gone deeper into the illustration, which is why it is hard maybe to answer those questions deep. But if someone, please go ahead and follow up with someone who invited you so you can have a one-on-one discussion on all the questions you might have. Other than that, if nobody has any other question, we're going to thank you again so much for choosing this Thursday evening. I know for some people who love politics, it is a great night tonight. So yeah, we'll let you go. You go follow up with other things you want to follow up. And we'll see you again next Thursday, 8 p.m. again, Central Time. We thank you again for joining, and you have a great night. Thank you.
Thank you. Thank you.
Thank you. Have a good night.